Hi, I'm Andrew Cormack, Head of Investment Distribution for CREDO in South Africa. CREDO is a global asset manager and wealth services provider. With over $5 billion on its platform and almost $2 billion in discretionary AUM, CREDO has been a solid investment partner for discerning investors since 1998. Based in London, CREDO offers a range of bespoke equity, fixed income, and multi-asset portfolios, as well as a range of tax-efficient funds or unit trusts. Today, I'm speaking with Jarrod Cahn, Portfolio Manager of the CREDO Global Equity Fund. Hi, Jarrod.
Hi, Andrew. How are you doing?
I'm good, thanks, and I hope you're well in London. Today, we want to speak to you about the CREDO Global Equity Fund. It recently celebrated its 5th year anniversary. There are so many global equity funds out there. What made CREDO decide to launch one?
Andrew, I think you need to go back to the history of CREDO's equity offerings. So in 2010, we launched the Best Ideas portfolio, followed by 2011, the Dividend Growth portfolio. And these are segregated individual large cap stock portfolios. Our clients really enjoyed the experience, but they came to us and said, can you not package this in a unitized format? And that's basically what we did. And by doing so, what we did is overcame a few issues that they had, particularly around annual reporting on capital gains tax, slightly better diversification in the sense that you have 40 stocks plus, as opposed to, say, 20 in the direct equity portfolios. Also, you had the issue of domicile, which was taken care of with the UCITS fund, given its Irish domicile. And lastly, scalability. In the Best Ideas and Dividend Growth portfolio, you need a minimum of £100,000. And if you wanted to add to that, it's quite difficult to get size, whereas obviously in a fund format, you can add smaller divisibility.
That's great, thanks. And what are the objectives of the CREDO Global Equity Fund? What is it seeking to achieve for investors?
So the investment objectives are basically to outperform the broader global equity market over time. In this case, the MSCI World is our benchmark. And the way we do that is we invest in developed world companies and countries, and predominantly in large and mega cap stocks. Liquidity is one of the key drivers of our fund. And to give you an example, we could liquidate over 90% of the portfolio in a morning.
Thanks. How is managing a fund different than managing a client's bespoke share portfolios?
So, as I alluded to earlier, the Best Ideas portfolio and Dividend Growth portfolio are segregated portfolios. These are 20 individual stocks. So it means that you have a 5% holding in each of those stocks. So when you're managing that against a fund, you basically only have 20 bullets. And your conviction of those stocks has to be very high. In a fund format, you have slightly different tactical allocation. So if your conviction on a stock at any one time wanes, you have the ability to trim that stock. Whereas in a segregated portfolio, it's pretty binary. You either sell or you hold. Likewise, if you want to add to that position, you can do so. The other thing is diversification. If you think about it, in a 20 stock portfolio, you have 5% in each holding. So if we want to take an overweight position in energy, in a fund format, we could take a, say, 8 or 10% position and have any number of stocks. Whereas in the fund, it's quite a bolshy thing to do, taking a 10% position, and then you're only allowed to take 2 stock positions. So diversification is another key factor. So those are essentially the 2 big differentials.
You mentioned stock selection, and as a bottom-up stock picker, clearly stock selection is key to running a successful fund or portfolio. What is your investment philosophy and approach towards investing?
So all of the paraphernalia that you'll read around CREDO is that we have a value-based investment approach. And I think the way to think of it is that we are somewhere between the intersection of value and quality. And flowing from that, you would expect very highly qualitative businesses in our portfolio. So companies with strong economic moats, being 1 or number 2 in their key industries, having strong balance sheets, having good free cash flow, strong margins, everything you'd expect from a high quality business. But that's not where it ends. Clearly, we want to buy these stocks at a discount to intrinsic value. We want to see the actual value in these companies. So we tend to buy stocks that are trading at what we think is a discount. And this discount can be targeted against previous multiples that they've traded on before, their peer group, or maybe even just the market. Typically what happens, we are buying stocks that are slightly out of vogue or have some kind of mispricing because of regulatory risks, or something that, as I say, is not happy with the market. So this is the type of investments we make. We're not a deep value fund. We are not a cigar butt fund. We don't choose to be contrarian. But clearly through the cycle, you need to buy certain stocks that are screening cheaply and that the rest of the herd is not buying. And you want to take advantage of those stocks when things turn. And that's typically what's happened over the last 12 to 18 months.
Thanks, Jarrod. That's very helpful. 2022 has been very eventful. People have been talking about risks coming to the fore that we haven't seen for a while. And clearly the risks change over time. So what are the key risks that you're considering right now when you are investing for the CREDO Global Equity Fund?
So Andrew, I mean, it's pretty well out there in terms of the cat's out of the bag. Interest rate risk, inflation risk, geopolitical risk, the strong dollar, the Russia-Ukraine war. These are all known knowns, so as to speak. And I guess what we need to do is try and mitigate our portfolio against, drastic moves in the market. So not that we're concerned, but I think, how deep a recession we're going to have in the UK and Europe, how that looks against the US, how the Cold War is going to play out between China and the US, what's going to happen with Russia. These are all issues, as I say, they are fairly well documented and known. But again, structuring your portfolio, not only in the short term, but more importantly, in the long term, is the key to where we're going to make outperformance for our clients.
Thanks, Jarrod. Now, we mentioned the 5-year anniversary. It's been a challenging and interesting 5 years to manage a fund. What comments would you have on performance of the fund since its inception?
So, as you know, the fund enjoyed its 5-year anniversary in July. And as we sit here at the beginning of November, we now have performance to the 1st of November 2022. And we're very proud of that performance. In fact, we have finished first quartile across all of the periods, including 3-month, 6-month, 12-month, 3-year, and 5-year against our sector competitors. So this is what we believe is an outstanding performance. And just to put that a little bit into perspective, given that we have a value bias, it's been difficult. The market certainly over the first 3 years of the launch of the fund, and in fact, over the last 12 years, has favored growth as an investment strategy. And it's only really been in the last 18 months where there's been a rotation back to value. So even during those tough periods where we've had to fight against the stream, we've actually performed relatively well. And we've captured a lot of that outperformance clearly in the last 18 months when there has been a rotation back into value.
You say struggled at times, but the numbers don't lie. And when we look at that performance, it's quite fantastic. So well done. How do you think you've achieved that, and particularly in 2022, when everyone's been commenting on it being a big bear market, full of volatility, and one of the most challenging investment periods for years?
So I think twofold. One is we have had a little bit of help in terms of style. There has, as I say, been a move away from growth stocks back into value and to a degree quality. So that's helped us generally speaking. But clearly from a tactical point of view, you needed to be in the right sectors. And we took a view, 3 years ago, in fact, as the pandemic was ending, that there would be an opening up. And with that opening up, there would be a normalization of interest rates. We weren't taking a particular view or bet of how quickly interest rates were going to move. But the fact is you couldn't have super unnatural rates at such low levels for so long. And hence, we started building positions in stocks and sectors that screen very cheaply. In that sense, there were the financials and insurers, healthcare, and to a less degree, energy stocks. And clearly over the last 12 months, the best performing sectors have pretty much been those sectors. So that's where most of the outperformance has come from.
Well, I'm sure your investors have been very happy with that, which raises the next question. Who is the right kind of investor for this fund? Or put another way, for what kind of investor is this fund appropriate?
We look for investors that share the same kind of mindset as ourselves. So people or investors that are looking for high quality businesses with a slightly different view towards value, that are happy to hold stocks through a cycle, who will enjoy periods where we may slightly underperform, but inevitably when they understand our investment philosophy and what we're trying to achieve. And through a cycle, we are hopeful that we will outperform the market as we have done, particularly recently, and that they'll enjoy this experience with us, not worrying about the short-term noise.
Thanks, Jarrod. Now, importantly, I'm sure some people watching are wondering how they can invest. What are the minimum investments and where can they find the fund?
So the fund is available on a host of platforms through a number of jurisdictions. The minimum size is either $5,000 or £5,000. And likewise, you can access the fund in South Africa through the BCI feeder fund. And the minimum size there is 500 Rand and is available again on a host of platforms in South Africa.
Thanks, Jarrod. And thanks very much for spending some time with us today. I'm sure everyone is interested in finding out more about the fund, how we invest, and what the performance has been. If you'd like to have any more information or you have some questions, please contact me directly, or in the UK, my colleague Damien Yeomans. You can contact your local CREDO relationship manager or directly from our website, www.credogroup.com. Thanks very much for listening, and until next time, goodbye.